So, will the government shutdown and stall budget talks in Washington hurt corporate earnings? And here to tell us whether it will or it won't is John Butters. He's senior earnings analyst with Factset. John, welcome back. Good to have you with us again. So, what's your forecast for earnings growth for the recently finished third quarter? What's your forecast for the fourth? And how do you think the impasses in Washington will affect those earnings, if at all?
Right, Tyler. Well, right now for the third quarter, looking for 2.8% growth, and that's down from an expectation of 6.5% at the start of the quarter. For the fourth quarter, analysts are looking for quite an improvement in earnings growth. The growth rate jumps up to 10% that quarter. So in terms of the impact of Washington, we probably won't see much of that in the third quarter, as most of the companies, the index, closed their third quarter on September 30th. But really the fourth quarter is the concern. Now, we haven't seen any downward revisions to that fourth quarter growth rate of 10% yet, but it's certainly something to keep an eye on as we progress through this earnings season.
John, you've been monitoring earnings for years now, and you've listened in on all of those analyst calls with the CEOs of companies. What do you expect CEOs to say about the outlook for the fourth quarter, and to what extent this whole Washington shutdown and the debate over the debt ceiling is impacting moves that they'll make and their profits?
Right. Well, as we know, the markets and CEOs dislike uncertainty, and that's the situation we're in right now. So I think the comments you'll hear leading up to October 17th will be concerns about the uncertainty, where are things going to go from here. And that's basically, I think, what you'll hear up until that point, at least until we get some resolution. Some of the other concerns from CEOs that we've seen so far in the companies that have reported, they've talked about global concerns, the negative impact of the stronger dollar against the yen and other currencies. We've seen concerns about global economies, specifically in Europe and emerging markets. Europe continues to be weak. Emerging markets, we're seeing a mixed picture. Yum's report tonight was obviously a weak performance in emerging markets. And then also companies are concerned about raising costs and cutting costs to maintain near record level margins. So again, foreign exchange rates, the global economy, and cost cutting are three themes to watch in the conference calls this quarter.
As we look at the third quarter numbers that are going to start rolling out with some speed here over the next 10 days or so, what do you expect the outliers will be? Which sectors are going to be the standouts on the plus side and the standouts on the negative side?
Right. Well, in terms of year-over-year growth, the financials sector is expected to be the best performing sector. Nearly 9% growth is expected there. That's a sector where we haven't really seen numbers come down that much during the course of the quarter. In that sector, a lot of the growth is concentrated with two companies, Bank of America and Morgan Stanley. The consumer discretionary sector is expected to be the second best performer. There you're seeing growth across the sector. 9 of the 12 industries are expecting growth. And on the flip side, the energy sector is expecting the weakest growth. Earnings are expected to be down nearly 3%. In that sector, we're seeing an interesting dichotomy. Chevron is the largest contributor to growth in that sector. If you exclude Chevron, we see a significant drop in the growth rate for the energy sector. And on the other hand, ExxonMobil is the largest detractor. If you exclude ExxonMobil, the energy sector would actually have positive growth for the quarter.
John, you talked about financials. We know that J.P. Morgan and Wells Fargo reporting on Friday. What are you expecting from them, not only about the third quarter, but what they might say about the outlook?
Right. Well, it's interesting. Two different scenarios for these companies. For J.P. Morgan, looking for a decline in EPS of about 14%. On the other hand, Wells Fargo is looking for growth of 11% this quarter. The estimate for Wells Fargo hasn't really moved all that much. So, again, the financial sector expect to be one of the better performers this quarter, and we'll certainly keep an eye out for what sort of guidance those companies are giving, particularly in the case of Wells Fargo, what they're seeing in terms of the mortgage refinancing and in the mortgage market.
All right, John, thank you very much. John Butters is senior earnings analyst with Factset.